Hello and welcome. Let's look at the market today. Today is Monday, 9th of October, and see how they're shaping up for the week. So the futures open, when the futures opened Sunday evening, they were down quite a bit because of the conflict between Israel and Hamas. And that carried into the cash market. And US markets primarily spend the first half in negative territory. The bond market was closed. The futures open, when they opened, they gapped down. And that started to provide some support to stocks. And as bond yields backed off across the yield curve, we're going to see that in a moment. That's when stocks started to rally. So S&P 500 finished up around 25 points. So you're looking at the daily chart of S&P 500. So for the second, so we have second green candles in a row. It was up on Friday, and then it was up today also. As things stands, this is the first level I'm watching, which is 43.35. So it hasn't been able to take this level out. So that's the first level. And then if you look at the moving averages, you can see that it still remains below the moving averages. So from a price structure point of view, you can see on a daily basis, we still have series of lower highs. This would be the last lower high. So if this level were to be taken out, then you can start to see higher lows being formed, but we're not there yet. So this is the first level I'm watching that it needs to take out before the structure starts to look positive. The second one is this line right here. This is the daily 50 EMA. This is around 43.85. So as long as it stays underneath these two levels, I would still remain cautious because you can see that the moving averages are moving lower. What you want to see is above the moving average and then consolidating, and that these moving averages then turn and starts to move higher. So we're not there yet. So until it takes out 43.85 and gets back above the moving average, I would still say that we should be a little bit cautious. Also, RSI is yet to get back above 50. It is still below the 50 level. So momentum indicators are still weak, I would say. MACD is crossing, but MACD crossing is not that important below the zero line. It's only relevant when it crosses above the zero line. It crossed right here and then it failed near the zero line. What you want to see is that not only does it cross, but it gets back above the zero line. That's when it becomes more meaningful. So yeah, it is crossing. But we need to wait until it gets back above the zero line. But RSI remains below zero. So I think there's still more work to be done, but I am beginning to see momentum improving. So I'm cautiously optimistic, but until these moving averages and RSI gets back above those levels, I would remain a little bit cautious. The other thing is that we've got PPI coming up on Wednesday and CPI on Thursday. Those two are very important CPI reports. They can move the market. So even if we rally ahead of that, things can change and market could still fall on Thursday. So I think we need to be a little bit cautious ahead of those. We also have the FOMC meeting, which comes out, minutes from the FOMC meeting that comes on Wednesday. And obviously we have the conflict going on in the Middle East. So there's still a lot of things that can basically derail this momentum. But nonetheless, I am watching to see whether the market can gradually work its way higher or whether we're going to get another leg down. So that's to be, determined. But at the moment, watch this level and watch this level on the upside. Now, obviously, this is the downside. We're still quite a bit above that level. If it were to break this level, then we would have problem. But those are the levels to watch. And overall, I would say kind of neutral on S&P 500. The strength is in Nasdaq. There's no question about it. Technology stocks are doing much better. So if I move the moving averages, you can clearly see that having traded between this two zone, it broke out on Friday, and today, even though market was weak in the first half, but managed to finish green. So this is good. And if you look at the moving averages, you can see that it had closed above the daily 20 and 50 moving average. So this is looking good. RSI is holding above the 50 level. So as long as that is the case, the bias, in my opinion, is to the upside for NASDAQ 100. If you look at the relevant levels for QQQ, so the QQQ, the next target would be around 374. Having traded between these two zones, a full measured move of this breakout is this level. So that would be the target. So let's see how things play out. You can see the momentum indicators are moving higher. If I look at SPY, so on SPY, the level to watch is where this candle is. So this is so that's 432. So once 432 is taken out, then it's this purple line, which is 437. So those would be the two levels to watch if you're trading SPY. And obviously you want to see that RSI get back above the 50 level. So that's S&P 500 and NASDAQ. If we look at the other markets, Russell 2000, yes, it bounced, but overall structure still remains negative. This is the key level as far as I'm concerned, because it was the previous swing high. So until it takes out this level, I think I would be cautious. You can see RSI remains well below the 50 level. So there's still a lot of work to be done on Russell. As for Dow, again, okay, fine, bounce second day in a row, but again, until and unless it's able to get back above this level and take out this moving average, I would be cautious. And RSI remains 50 level. I can see that it's moving. It's entirely possible that this is a oversold bounce, and it could get rejected at this level, or when RSI comes up to this 50 level, it could get rejected. So I think we still need to be a little bit cautious on the market overall, with the exception of Nasdaq. The question is whether the strength in Nasdaq is going to pull up S&P 500, Russell 2000, and Dow, or the weakness in the other averages is going to pull Nasdaq down. So we don't know that, so we'll have to see. But at least at the moment, if you're looking for long ideas, it's the technology space where you want to be, right? So moving on to the bond, I think this is basically where the action is. So I talked about bond yields on the weekend update, and I said that there is a potential for a trade coming up, and it is happening. I talked about this level right here, RSI 70. I said that if this level breaks, then the trade starts, and it broke today, and you can see this big red candle, because this was the support. It was a resistance right here, it was a resistance right here, it was a resistance right here, and then it broke through this level in September and found support. Then when today it broke this level, that's when we see this green candle, this big red candle. So I think there is a little bit more weakness. So there are two ways I'm looking at it. First one is this level, which is around 4.5. That's because it traded within this level. So a full measured mode of that is this number. The other way to look at it would be RSI 50 level. Right here, you can see RSI 50 was a support previously. So whichever comes first. If 4.5 comes in first, then I would close the long position and become neutral. Or if RSI 50 gets hit first, then I would basically not have any short position on yields or long position on bonds. So I think there is a little bit more weakness based on the fact that the momentum is weakening. It's not just the bond yield 10-year, it's across the yield curve. This is the 2-year bond yield. You can see that clearly forming a lower low. Even the European the bond market also fell quite a bit. So let's just have a look, show you that one. German bond yields. You can see that big drop in German bonds. This is the gilt, the UK bond. So the yields have been pulling back, not just in the US but also in Europe. Dollar was weak, so obviously you can see dollar pulling back. I think as long as dollar the yields pull back, I can see some pullback in dollar. Watch the RSI 50. This is an important level. We could see a bounce when it reaches this level, but if it breaks below the 50 and holds it there, then I would be cautious on dollar. Gold bounced, obviously finding support, bounced after the turmoil in the Middle East. So gold was up quite a bit. Watch this level. This was the previous swing low. So watch this level or RSI 50. If it comes up to RSI 50, this is where I would be cautious, because this could very well be an oversold bounce. If that's the case, then I would expect rejection at this level or rejection at this level, whichever comes first. So gold has a little bit more to the upside. So watch those levels and RSI level. Crude oil was a beneficiary of what's happening in the Middle East. I talked about in the video that when it reached this level, it was oversold. So we did get the bounce. Now, if you look at the moving averages, you will see that right now it's trapped in between the daily 20 and 50 EMA. So until and unless oil is able to get through this level, this is around 88.25, or RSI get back above the zero line, I would be a little bit cautious. The other thing is that today's reaction, you could say, is primarily what's happening in the Middle East. So if there is a ceasefire announcement, then a lot of this gain could be reversed. So I would be very cautious on the oil at the moment, because it's being influenced by what's happening in the Middle East. Now let's look at some of the individual some sectors. I talked about XLK. This is where I see strength. It's now working through its daily 20 and 50 EMA. RSI is above the 50 level. This one and communication, these are the two strong sectors. So if you're looking for long ideas, this is basically where you want to be. Today we saw some bounce in healthcare. So very oversold. So we got some good bounce, and this definitely helped S&P 500. Industrials also bounced. Very, very oversold, but still has a lot of work to do. Energy bounced, because of the oil. XLE needs to get through this level right here. So if I remove the moving averages, you can see right there. In terms of individual stocks and sectors, I'm watching semiconductor, either SOX or SMH, whichever. You can see that SMH looks positive to me. As long as RSI can stay above 50, I think there is more upside. In terms of individual names, obviously I like Broadcom right now. So this is one name that I'm watching. Other names that I'm watching right now is within the software space. This is MongoDB. This is the level I'm watching. If it's able to take out this level, this was the previous rejection level. This is around 361. I think it can start to move higher. You can see RSI is already moved above 50. So I'm watching this one for a long idea once it gets through 361. Similarly, ServiceNow is also looking interesting to me, because you can see that it's beginning to form a this sort of pattern, higher low right here, but it needs to get through this high, which is around 566. Rambus is another one that I'm watching. if it's able to get through this level, the momentum indicators are moving higher. So I think this one, looks more positive to me. The other one I'm watching is this one, Take-Two Software. It's consolidated. It has now gone through this level. Next level is this level. If it's able to get through this level, then there's quite a bit of open space until it gets to this level. All right, I'll leave it at that. I thank you very much for watching the video, and I hope to see you again in a future video.